I'm with my friend Karla Kyte with CrossCountry Mortgage. Karla is a divorce mortgage lending professional, and we've been doing our monthly calls, just talking about the market, talking about divorce and real estate, and how each of us might be able to better serve our communities in that manner. So, welcome, Karla. Happy New Year.
Thank you, Carol. Happy New Year to you as well.
Yeah. I think we wanted to talk a little bit today just about the rates. We were talking earlier, as we usually do when we get on these calls, that the rates had not been that great, but Carla
Yes.
informed me that today is actually a good day. So I'm going to let her share a little bit just about the bond market and kind of talk about mortgage rates and how those are affected and that kind of thing.
Awesome. Thank you. Yeah, so I'm gonna get this screen share going here, but yeah, I mean, to be honest with you, rates have been pretty doom and gloom for a while, and I'm gonna share this mortgage-backed securities chart so that that people can kind of get a little bit of an understanding of what has gone on recently. So first of all, this is a candlestick chart. This is mortgage-backed securities, and this is what mortgage rates are tied to. One of the biggest misconceptions out there is when you hear that the feds are lowering interest rates, and people automatically go to, oh, mortgage
Yeah,
rates are coming down, right?
not
But that is, in fact, not what they are lowering. They're lowering the overnight federal funds rate. That's the overnight borrowing rate. And so when that happens, there is a direct effect on things like home equity lines of credit, auto loans, credit cards, that those kind of interest rates. But our federal government does not increase or lower mortgage rates. They are market driven and they are derived from mortgage-backed securities right here.
Yep.
So with that said, if you're looking at this chart, the easiest way to understand it is green is good, red is bad. And we want mortgage-backed securities to be higher for interest rates to be lower.
Yeah.
Okay.
Okay. Yep.
So I have it adjusted at 6 months right now. So we're doing a look back from today. Today is over here, this nice big green bar.
Yep.
That is today.
All
And
right. That's why
then it
you
goes
said it's a good day.
yeah, it is a good day. And we are so happy to see this because we have just been in this weird, like, tailspin of a space pretty much since September when the Feds did their first rate drop of 50 basis points. So I
Okay.
want to show you, um, let me go back. Let me go back 1 year really quick because I want to kind of show from when rates really started improving. So really, it was kind of about right here. So the first part of July, you can see lots of green and lots of increase, right? So pretty much from July until September 16th, right here. Yep,
Yeah.
September 16th, 17th. Um, we were on this really nice trend. Now, keep in mind, we're always going to have bad days mixed in with our good days, but we were still in this trajectory in the right direction for interest rates to continue coming down. So
Okay.
we were sitting in the high fives in September. And then we had the Feds did their decrease of 50 basis points, and we thought that was still a positive for us, but it wasn't. The market reacted differently. Um, then after that, the first part of October, we had an unemployment report that also our mortgage-backed securities market did not like. And so we
Okay.
had another significant drop here. And then we just continued to see more economic data. There was a big election at the beginning of
Yeah.
November. So we just had more and more unknown and kind of more turmoil in the economic world.
Got
So
it.
I think mostly the unknown is what was affecting us there. And then here we were towards the end of November, we started going back again in the right direction.
Hmm.
And we were all, okay, here we go. We're past the election, right? All these things.
Yeah.
And then there was more talk about what the feds were going to do with rates based on inflation numbers and economic data. And the markets just reacted really poorly and we plummeted again. Last Friday, was the unemployment report that comes out. It's always the first Friday of every month. But in
Okay.
January, it was pushed to last Friday because the first Friday was the day after a holiday and the markets were closed. So it pushed all the way to last Friday on the 10th. And the report was a big miss for our markets. It actually came out much better than expected, which you would think
Hmm.
would be good, but it's bad. Like we
Right.
typically want to see a bad employment report. So we had a
Because
really bad day.
that will actually help the mortgage rates go down if if unemployment is not
It's
good.
up.
It's up. Yeah.
Yeah, if unemployment is up, and it was actually down, and it was down more than what they expected.
Okay.
So we had a really rough day on Friday.
Funny. Yep.
And then on Monday, it was, I think, just a bit of a hangover from Friday. Also anticipating economic reports that were out yesterday and today.
Okay.
Today was the big CPI report. That's consumer, what is
Price
CPI?
index.
Consumer Price Index.
Price index. I'm
Yeah,
guessing.
it's the
Okay.
inflation report. Okay. So it actually the inflation it actually was lower than expectations.
Active.
So that was good for us. So we're finally having a really good day in the market. I don't expect us to shoot all the way back up here right away, because there's all other kinds of economic data that comes out all the time. And
Right.
so that will impact how we move. But I am super hopeful, and I hope that this is just something in the right direction. So if we can just
Right.
keep going in this direction for a while, we should start to see rates improve. So just so you know, from here, from September, we were in the high fives.
Right.
Here we were, this past week, we were, depending on your situation, right? Because rates are different for everybody based on their situation with their credit
Mhm.
score, their loan to value, their loan program.
Yep.
But we were sitting like in the high sixes, low sevens. Okay. It
Yep.
also depends on what you want to pay for your interest rate. So you can always
Right.
pay points to buy that interest rate down. So I'm just generally speaking,
Yep.
I just wanted you to see like kind of what that difference has been. So hopefully we'll see some improvement and we'll start heading back down comfortably, into the sixes, moving forward. So we'll see. Fingers crossed.
Yeah.
But yeah, I wanted you to see that whole movement there, and then I can zoom back in so you can see a little bit more. This is today right here. So
That's great information. And most people don't get that, bird's eye
yeah,
view of that. So, yeah, thank you for sharing that. That's very helpful, I think, for everybody just to be able
yeah,
to see kind of where we were in September and where we've been and where we're going. And like you said, it's different for everybody. And, today's a good day. So,
yeah. And I think it's really important to note that if you are out there as purchasing a home, you cannot time purchasing a home with what's going on here in the market. And rates don't move so drastic. It's not like today the rate, or let's say 2 days ago when it was much worse. It's not like the interest rate was 7.5 then and it's 6.5 today. The interest rates
not big of
don't.
a jump. Yeah.
Yeah, it's not that drastic. It is very gradual. And I've always said that rates go up faster than they come down. So if you think about it, like if you were the one loaning somebody money,
Hmm.
um, right, you would, as soon as your cost on your money increases, you're going to jump to protect yourself and protect your assets.
Right.
You're going to increase your rates as quick as possible. And then when you see improvement, you're going to be hesitant
Yes.
to drop back down, but you have to be competitive with other people, but you're going to still be hesitant until you see more than one day of,
Right.
you know, good stuff in the
Happy
market.
activity.
So
Yeah.
they
Hmm.
always come down quicker or they come down slower than they go up.
Right. Great
Yeah.
information. Thank you so much,
Thanks.
Carla. That was very
Yeah.
helpful.
Yeah.
As we're talking about the real estate market, usually spring is typically the hottest time of year, and that's nationwide with the National Association of Realtors stats. That's pretty much a nationwide thing, is that spring is the best time to sell. Spring being any time from March to May. Even summer is a good time to sell. A lot of people, as school's ending and they're trying to figure out what they're doing, job transfers and that kind of stuff, a lot of people want to move during the summer as well. And speaking a little bit about to our divorcing clients, none of that really matters, unfortunately, because
Um,
once you are in that situation and you know that you need to sell, it is what it is, and the timing is just kind of how it is. So, what have you been seeing as we've come into, or 2 months, two weeks into the year now? What have you been seeing as far as an increase in the amount of calls and
oh,
things from your, yeah.
yeah. Well, I can tell you that if I would open up my calendar, I would not have a free minute.
Okay.
Um, so, and as a matter of fact, um, it's actually causing me to change the way I am running my divorce mortgage planning business,
Mm,
because I can't continue to just stack myself with free 20-minute free consultations every day, right?
sure.
So
Yeah.
um, so yeah, it's incredibly busy right now. People need this information because it's it's a it's a big difference when you are splitting household income and you're trying to figure out how to either keep the marital home or even selling the marital home and moving on, and you both purchasing new homes
Your homes.
at
Mhm.
the higher cost and the higher interest rate, right? So yeah, we are incredibly busy. And I have honestly had to block my calendar so that I'm only available at certain times of the day for these free consultations. Because I,
Right.
right?
Now, how are people finding out about that for you? Like, is that on, do you have a website that is actually, you can say, you say
Yeah.
that, okay.
Yeah. So I do have a website. It's mydivorcemortgageplanning.com. I'm heavily on social media. I work with a lot of divorce professionals. So I literally just got back from presenting continuing legal education to certified financial planners and attorneys.
Okay.
And so I do a lot of education. Um, I'm actually going to an event on Friday because our family court system is really in turmoil right now because
Mm,
what they're showing is that 70% of the divorce cases today are pro se, meaning 70% of the people getting divorced today do not have attorney
right.
representation in the courtroom. And it's bogging down the system horribly. Um,
Mhm.
the dockets are cram-packed full. Uh, Often, what I've learned, often new judges enter, as a new judge, you enter into the family court system. And so, I mean, the judges don't even know that what they're ruling on is is going to work for these clients or not. Like if you have a pro se client come in and they say, Carol's going to keep the house,
Mhm.
and but Carol has no idea how she's going to keep the house.
Yeah.
Carol just thinks that she can keep the house because she thinks that she can afford the current payment, but has no
Right.
plans of refinancing or assuming that mortgage.
Mhm.
Then the divorce is finalized, and there's usually some stipulation in there that would say, Carol, you have to assume this house within 3 months of your finalization of the divorce.
And the
But
judge is the one signing that off, and she
yeah,
doesn't really have she or he doesn't have any idea if that is actually doable on the,
right.
okay.
Right.
Wow.
And the scarier thing is that often Carol would have called her current servicer or some random lender that she knows or worked with in the past that's not specialized in divorce
Mhm.
and asked a couple of questions.
Which were
Um,
not the right questions, probably.
right. Probably not the right questions, so you're not going to get the right answers, if this is possible,
Yeah.
for you to assume the loan or refinance. So um, it's this is a really, really busy space and it's very, very messy.
Yeah.
Yeah.
Okay. So is there anything that you guys are doing as far as like classes or something to where you're not spending the 20 minutes with individuals? Is there somewhere people can go to get more information on what they're qualified for?
Not really.
Okay.
And the reason why is because everybody's situation is very
Is-
unique to them, right? So I mean, for me to take a client and tell them what they'll qualify for, a lot of people might be very straightforward, but you and I, being in this business, know that that is just not the case. And especially not like I've been lending for 27 years, and I can tell you this space has changed tremendously, not
Mhm.
just because of our guidelines and our programs that we offer, but people are more complicated. You know, it's very seldom that you come across somebody that just has a straight salary, job. And especially in the divorce space, it might not even be something like that. Like we might need to show maintenance or child support for them to qualify to
Right,
assume the loan or refinance the loan. So it's really no, I would discourage anybody to try to figure this out on their own unless they have a lending background and
right,
have a really good, clear understanding of how to navigate this in the divorce space, because those are different. Like you got to have a lending background, first of all, and you have to
yeah,
understand the guidelines under
right,
divorce.
right. Okay.
Yeah.
So basically, there's not like a quick answer for
Mhm.
any of our viewers that are in this space.
Yeah.
However,
And
I do, go ahead.
well, I was just going to say, unfortunately, I think that's what people think they're going to get from me in a 20-minute phone call. There's no way I could figure this out in 20 minutes.
Yeah,
I need to spend some good solid time looking through everything and making sure that we have checked all those boxes and make sure that they are are in a place where they can actually qualify for what
right.
it is that they're agreeing to in their separation agreement. So it's
Yeah,
very time consuming.
yeah.
Yeah.
So another piece of that is just on the real estate side. I'm obviously not a lender. I don't have any idea of what you do on that side. But if you want to start somewhere, I would say reach out to an agent, a real estate agent that actually has some divorce background.
Yeah.
She or he can actually give you information on, like how many months do you need to have maintenance before you can qualify for a loan by yourself? I mean, I have a lot of that information. I don't necessarily can go through and let somebody know, what they're going to be able to do, but I can also give you some information on just next steps and getting you maybe to the next week, to the next month before you actually go down that
Yeah.
long.
And
So,
I think that's like as a divorce professional, just like you, we absolutely need to share our resources. But just like that, like I know a lot of stuff in terms of on the legal side,
right.
tax implications, stuff like that. So I'll raise that flag, but I will never advise them
Sure.
in that, just like you said. So
Yeah.
it's important to know what the possibilities might be, and then to provide the resource so that they can go to get that information. I mean, there
Yes.
is a lot that you can look up online, but
Yeah.
you've got to know what you're looking for, and you've got to make sure that you're getting the right information because some of that information is expired, and some of it is just simply, unless you are in this space, you will not understand exactly what it is that
Right.
they're saying.
Yeah.
Yeah.
Yeah. So just to reiterate, Carla and I both, you have a YouTube channel, I have a YouTube channel. There's a lot of resources on my YouTube channel, I know. And so if you're looking for just some more information and you don't have somebody that you can talk to right away, please just reach out and look at what we have on there. We post these interviews that we have, and usually we are addressing some form of just divorced in the whole lending space every month when we do these. So please feel free to go back and watch these. If you don't have anything better to do at night, you want to binge watch me and Carla and our monthly update, go for it.
Yeah.
But thank you, Carla. It's always just a pleasure, and you're very thorough, and I just love the fact that you're just serving this whole population just with such a good heart. So thank you.
Thank you. I'm pretty passionate about what I do.
All right. Bye, guys.
Bye.